traders, I posted this video yesterday into TradingView. You can see here on gold, and the video was on this setup and our target here. So the target was reached, and in this video it's a continuation, giving you my take on where to next. My bias is bullish. Next target is going to be these highs over here to the left, so we'll just call that a liquidity target. Liquidity target as in this is looking for the high of this previous trading range, right? This entire range here. So we look at this move, and as it's trading up, we're looking for these levels where price is most likely going to react. And I mean, you can see how price did react off, if you grab this, it reacted off this level here, so it spiked up, hit it, spiked back down again. This level here, it hits the level and it chews into the liquidity in here. You see the reaction off that liquidity, right? So it's all about liquidity, and given that this is trending up, the draw on liquidity is the high over here, in my opinion. Okay, so that's going to be my next target. If we go back out, yeah, you can see how the high over here was reached, and this was a liquidity target as well, the draw on liquidity above these highs here. So that's where that traded to, and look at the reaction off this level. So we're looking at the buy stops resting above here being taken out, and you know, it trades off that. So if we're going to consider this potentially bullish, the next target then above here would be these highs. Okay, just mark it up so we've got a bit of a roadmap, and we've also got this distribution level through here that plays an important part as well. So that's a level of resistance that we need to be mindful of. Okay, so looking for a way in, if we go down the time frame, so I'd really like to enter on a 15-minute chart. So this has done its thing pretty much. Now, to get involved with this, you want to be a little bit careful. See how we're getting a lower low here, lower highs. This is now pulling back. We don't know how far this is going to pull back. Right, this could be the limit here, but I mean, it could very well trade lower, looking for some of these targets down in here, like the liquidity under here, for example. So the way to get involved with this is to watch the price swing, and if it continues lower high, lower low, just wait for the range, then look for a move in the direction that you want to trade, enticing buyers in, setting up more stop losses under. Then you want to look for the hit on the stops, and then you want to see this trading off with speed, creating displacement, right? So this is kind of a mix of Wyckoff and ICT. That's my background, basically. You know, I just do my version of a lot of that information, but I'm looking for this particular type of price action, and then the volatility kicks in after it. This could happen anywhere. It could happen up here. All right, we're looking at this range where my mouse is. It could happen here. That could quite happily trade sideways here and then break structure, bullish, or it could come back down into this level here. It could come back down, you know what I mean? Like it could occur anywhere, but I think the key takeaway with this is we're currently seeing lower highs and lower lows. So wait for that to play out, and then you're going to wait for higher highs and higher lows to kick in. So we wait for the break of market structure, and then the opportunity to get involved is on that breakout. I've set up a whole system around identifying these opportunities here, where we get a pullback on the higher time frame and the market starts to, or price starts to rotate, and then we get an opportunity then to enter, right? And you know, always look at it from the higher time frame perspective. If we go to the 1 hour or 4 hour, yep, okay. So on the 4 hour, we could look at the Fibonacci swing low here to high. See the 50%? That's the equilibrium from this price swing, and I'm looking for, well, this could set up right here. and then we look for the break of market structure bullish. Just depends where it decides. I mean, or it could trade further south, guys. Okay, so that's what I'm saying. So just be a little bit careful. Just wait for that break of market structure, the bullish break of market structure. It's lower highs, lower lows, and they turn into higher highs, higher lows. See, it's as easy as that. Well, easier said than done, right? Well, look at this. You know, there's a lower high, lower low, and then you see higher highs, higher lows kicking in here. That's your opportunity when you start to see it. This is for the benefit of new traders who are struggling in the markets at the moment, and you're looking to get involved and you don't know how to get involved. Lower highs, lower lows here, guys. I'd love you to comment and definitely share your thoughts, and then we break out of this trend. You can see the break here, the shift in structure, and higher highs, higher lows kick in. That's a simplified version of how to get involved with this. I don't want to complicate it. So yeah, I mean that's my take, guys. I'd love your comments. Definitely do that. We've got some targets here. Stop loss under the previous low, that kind of thing. And that's my take on the XAUUSD Gold. With that, I hope you have a great day. Safe trading. See you in the next one.